You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. This week on The Biz, the monthly update series for July 2013, and on today's show, the Life Insurance Update with special guest and co-host Stephanie Ogilvie.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, batting for the absent Jessica Lopez, Stephanie Ogilvie. Hey, Stephanie, welcome to the show.
Hi, thank you.
Well, Stephanie is, I really should troll Stephanie's mind. She's a psychology major. She graduated the bachelor's. And I'm reading, we're going to feature consumer questions to your host here. Last month, let's see, we're doing the July show. So last month, I answered almost 400 consumer questions out on the web. And these questions, some of them sound kind of weird. And of course, they're not educated in our area. So it's really, I don't have any problem with understanding how people misspeak. But I wanted to bring it today, a lot of our life questions that are here, and I want you to know about it because these are the questions that we're being asked. And when I see consistent, and I see consistent questions keep coming back again and again, it tells me either we're not doing a good job educating our clients, or that the whole consumer area right now is just brand new to thinking about life insurance. I can hardly believe it, but maybe it is. So I know you got a stack of questions. Let's get into it. These are questions coming directly from consumers online to me.
All right, Steve, I have, which is better, term or life insurance?
Well, I think what they're asking here is which is better, term or whole life? I always try to do product suitability based on the client's needs. If the client has an economic liability that only is a time certain event, maybe he's only going to be in a mortgage for 30 years, maybe all the expense loads he's going to have and liabilities are going to be that long, I might look at 30-year term and call it a day. But if I need permanent coverage, I'm either going to be looking at guaranteed universal life, which by the way can take me all the way out to age 121. Interesting to note that, remember, Jean Clement died in France as the Guinness Book of World Records. She died at 122 years, 146 days.
Wow.
So when I think about paying insurance to 121, and people always go, Steve, that's so long. Yeah, but Jean Clement went to 122 years. So what I'm always looking for, is it a permanent situation? Is it a terminal situation? And then I make my choice, term insurance or permanent insurance.
Great, thank you. How about, can life insurance drop you?
Well, now the word drop, once your policy's issued, there's a 2-year contestability and the clock starts. And during that time period, if you were to commit suicide, they would not pay the claim. And on top of that, if there was some misstatement or misrepresentation or out and out fraud or material omission where you actually left something out, that would cause that 2-year contestability. They could come back and say, hey, we're not paying the claim. You get your money back at whatever interest rate and call it a day. If it was fraudulent and it had criminal activity, then you might even have a worse situation. But the word drop, nobody's going to really drop you. Now, keep in mind, though, there are people trying to scam the smoking issue. They go in and they say, I heard a rumor that if you stop smoking for 8 days, it won't show up in your urine analysis. And there's some reality to this. But think about it. If they find out that you were smoking the last year, you still are a smoker. And if you try to scam the system, what's going to happen is they'll two parts. Either one, they'll deny the claim outright, or they'll go ahead and give you the smoker death benefit, not the non-smoker death benefit, which of course is going to be less.
What was the first insurance company?
Well, interesting to note, remember I'm a big fan of Sir Edmund Halley, the guy who actually discovered the comet, consequently named after him. But Sir Edmund also constructed the first actuarial table that we used. Back in the late 1600s, there was another company, maybe you've heard of them, called Lloyd's of London. They used to insure merchant ships. And they started getting into insuring all kinds of cargo with all kinds of risk. And between Sir Edmund Halley and the Lloyd's of London, all of a sudden we started to able to craft the first actuarial table. And basically, even though we're 300 years later and several CSO mortality tables later, we use pretty much the same tables. And keep in mind that in the U.S., the Presbyterian Fund came in the late 1700s, and the first whole life company that was mutual in the United States was the Venerable New England in 1835.
Oh, wow. Does universal life insurance have cash value?
Well, it depends upon how you do it. If I have guaranteed universal life, the answer is probably going to be no. There are a few companies that have the exception, but basically across the board, you're not going to get any kind of cash value with a guaranteed universal life. However, with current assumption UL, which could be interest rate driven, could be indexed driven, it could be variable separate sub-account driven, depending upon which kind. If you do it right, and you're doing this to accumulate cash, you want to use the lowest death benefit that's compliant with TAMRA so that you can take the money out free. But can it accumulate cash? Yes, it should. But remember, it's all based on the performance of not only the side fund, is it interest rate, is the crediting method indices, or is the crediting method separate sub-accounts like in variable. All three of these ideas you have to keep in mind that can accumulate cash, but it's all dependent on the performance of the side account that we're using.
What is human life value in insurance?
Well, now this is funny because Stephanie and I are from two different generations, and this will give you an idea. When I first started working, I was told, Steve, guess what? You're going to work till you're 65 and you're going to retire. Now some of us are going to have to work till 70 apparently after 2008's crash. But if you take the value of your life, Stephanie, the odds are your generation is going to work till 70. That means if you've been working right out of college, you're going to have 50 years of life. If you took the total amount of your earning power over 50 years and gave yourself maybe even a small 1% inflation, you're going to let that your value is your total earning power over your entire 50 years to expect. And think about this. Stephanie and her generation, if they stay non-smoker, pretty good health and exercise, all these gals are going to see age late 90s, early 100s all day long. Now, I don't know what the lifestyle is going to be at that time, but hey, you're going to be living not forever, but it will seem like forever.
I'll be living.
I know. Think about it. When we come back from the break, we're going to continue our life insurance update, talking about with consumers with Stephanie Ogilvy. And don't forget, you can enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Stephanie Ogilvy. And remember, you can call us today about our materials. Just hop out to thebiz.tv and we'll order whatever you want today, these questions especially. And remember, while you're out there, click on the Biz blog for the Backroom Technician 30-day free trial offer so you can access the best education, analysis, and client materials for financial planning. Almost every scenario is covered there. And just a heads up, before moving forward with any of the ideas you hear on the show, always consult your tax advisor, your legal counsel, as well as your broker-dealer compliance officer if you're FINRA licensed. We're in the middle of our monthly life insurance update. We're talking about questions that we get online. I answered almost 400 in June. So we're kind of going through some of the top ones in life insurance. Some of them may sound bizarre because our audience is dominantly producer audiences, but these are the questions that people are asking. And so we want to be able to start to kind of form in our mouth the retail language, the kind of consumer conversations that we're having. What's the next question we have?
Is whole life insurance a good retirement investment?
Well, the word investment, I generally shy away from using a word for investment on an insurance product that has no attachment or tie to securities like variable might have. So I would like to rephrase it and say, is whole life a good retirement savings plan? Because that'd be a little bit more accurate. And the answer to that is it can be if it's designed right. Remember, for people who are really conservative, who are long haul investors, or I just said savers. And these people are looking for some kind of tax advantages at the end, which could be tax-free income. And remember that tax-free income will never fall on the provisional income test for Social Security benefit taxation, so it's kind of a thing to look at. But remember, that policy's got to be kept in force for the life of the insured, because if you ever dropped it or terminated or it lapsed, ordinary income tax would be a huge result, and there's other issues on top of that as well. But as a good plan, what I like to recommend is always buy the lowest base amount of whole life, if you're going to go this way, buy the maximum term rider under TAMRA, and then use a paid up additions rider. Those three things together can give you a pretty good rate of return. Generally, historically, has beaten treasuries. Remember, no, the future performance could be something different, but basically it's decent for a good long haul saver who's conservative, and I'm willing to look at it as something that you might want to look at it for a supplemental retirement plan.
Great. What determines how much life insurance you need?
Well, interesting. This is really good. And of course, when we counsel young people that are getting married, we tell them, hey, there are two things that are going to get you in trouble in your marriage. One is sexual infidelity, and the other one is finance. So what we want to do is we want to put together how much insurance. So when I'm sitting down with my beloved and I'm trying to figure out what I should clock, what should be that number, I'm going to have to take on all our liabilities. First big one, of course, is your mortgage. Maybe student loans, your credit card debt, your auto debt. Anything that you have debt is going to be quarantined into the whole area of what do I owe, my IOUs out on the street. The second thing, though, is what are my future obligations? Hey, you may have children. You may want to fund their education, your retirement account. If you're like me and have daughters, the culture hasn't changed. You're on the hook for the wedding. So these are future obligations that you may want to look at. And those kind of ideas, you're putting the totals of my future obligations, my debt, and if you have any inclination to make a difference, either with your family, your grandchildren, or maybe a charity of your choice, you want to put all that together and then multiply that, add it together, and then how many years, maybe multiply it with a 1% inflationary rate, because this is what we know today. It may be different tomorrow. That's a lot when you think about it. When you add up all our obligations and liabilities and all the things that we're going to be doing in the future, it can add up to a big number, but I got to tell you, term insurance right now is as cheap as I've ever seen it. And think about this. Females, 25, super preferred, non-smoker, for $100,000 worth of coverage for a 10-year are less than $100 a year.
Wow.
I mean, that's barely, I think the policy fees, 90% of that. What's our next question?
What does it mean to be the beneficiary of a life insurance policy?
Okay, the insured, let's say I'm the insured and I have financial obligations and liabilities. Well, there could be people that would suffer if my demise occurred. So to protect my family, I put my wife, and I'm a community property state, she's my beneficiary. And that means that if anything happened to me, any debt I had, all the future obligations are going to be paid to her, by the way, tax-free. And then she's going to be able to take those proceeds, pay off all our bills, our mortgage, and put money aside for children's education, although I'm out of that game now. So I'm just saying these are the kind of things that you want to start thinking of. Beneficiaries are the people who would suffer most by your absence. So you want to be able to cover them. And remember, if it's children, grandchildren, even a charity, maybe a charity is really dependent on your regular giving, that could be another area where they would suffer economic harm because you're not around anymore.
Interesting. How much will term life insurance cost?
Well, I just told you, for a female 25 non-smoker super preferred, it's dirt cheap. Remember, we bust out term now in 5-year increments, 5, 10, 15, 20, and 30 years. Now, there are 2 companies now that'll actually customize the time. It could be 13 years, 17 years, whatever you want to do. But what I'm looking for is the price tag. Well, that's going to depend on your gender, your age, your smoking status, your health history, your current health condition, and what's the length of the period and term insurance you're going to buy, and how much are you going to buy. All those things factor in. There's so many variables. But when I'm responding online, I usually take somebody that's a young person to show them how cheap it is. And if you see television, they'll always talk about life insurance, what's the price tag? And they always do the most healthiest person with the lowest possible number to get the call made. I notice that that's kind of like a consumer kind of entrapment there. But what I've done is I've given you all the variables that you're going to need to do that, and that will help you come up with a quote. And those quotes are really unbelievable because the market is so intensely competitive. I promise you'll be able to get some kind of bid that you can live with. Well, that's our show for today. Remember, you can follow me on Twitter, Facebook, LinkedIn, or email me, steve@thebiz. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.